Hi, my name is Alex Carlucci with GustanCho.com. Here to talk to you today about getting into a mortgage in Illinois with no money down. And I'm going to tell you an example, and that's all I'm going to do for you today. But first I need to teach you proration so you understand it, because that's the little trick at the end that's going to make it really a great deal for you. So Illinois has got things called tax prorations. Other states have them, but not as big as Illinois does. And some states have none, and there are some states that actually you have to pay the prorations to the sellers. Tax prorations are taxes owed by the sellers to the buyers because tax bills are paid a year late in Illinois. Some states they're prepaid by the seller, so you have to pay the seller the proration. So for our sake, in Illinois, taxes are paid a year late. So when you close on a mortgage, the seller has to give you last year's tax bill, because the next bill that you pay is for last year. So if you understand that concept, then you're going to understand how this is going to work. So remember, tax prorations, you're going to get roughly a year back. It's different amounts during the year. July, August, September are the lowest. It's like 8 months, 9 months, 10 months, but then you get 11, 12, 13, 14, and then back down to like 13, 12, 11, and then it goes back down. But July, August, and September are like 8, 9, 10 months of taxes back given to you. So this is how you're going to get into a house in Illinois with no money down, and it's not always going to work out this way, but it always works out in your favor this way. I'll give you an example of how you don't get into no money down but very little money down. So let's go with no money down. So let's say you find a house and it's $200,000 and you're going to go FHA and you're going to get all your closing costs credited. Let's say the closing costs are $7,500. And FHA allows for up to 6% of closing costs to be credited. So 3% would be $6,000. That would not be enough. So if conventional, you can't do this. So you got to go FHA so you can get that $7,500 credit. So you're going to ask the sellers for $7,500. So their closing costs are covered. You're going to have to show 3.5% down in your bank account, because that's what FHA requires. You have to show 3.5%. So now you got your $7,000 in the bank. Your tax bill $7,000. Your closing costs are credited for. So when you go to the closing table, at $7,000 down payment, you get the tax prorations from last year of $7,000 for the tax bill to cover your down payment. So if you put $1,000 earnest money down, and now you only have to show $6,000 to close, then the tax proration is going to give you $7,000. You actually walk away from the closing table with that $1,000 back. You cannot get any more money than your earnest money back at closing on an FHA loan. So if that proration somehow is larger than your down payment, it gets a little dicey. They do a principal reduction. But that's a perfect scenario how you get into a house with no money down in Illinois. Now this is Illinois specific, so please title this Illinois, my director, as Illinois mortgage, no money down. Now this is how, so what you want to be looking for in this situation is a higher tax bill. So you're not really rooting for a higher tax bill, because that makes your monthly payment higher. But if you really truly want no money down, the combination is take 3.5% down of your purchase price, subtract a year's worth of taxes unless it's July, August, and September, and you can take off that year of taxes off of your 3.5%, and that's what you're going to bring to close if you get your closing costs credited exactly correct by your loan officer. That's why you got to use GustanCho.com. We get those numbers really close, and that's a tough number when you see how many inputs goes into those closing costs, that we can get so close every time. So keep that in mind. You take 3.5% down. So let's do another one. Let's do $100,000. Let's say the taxes are $4,000. Let's just say they're $3,500. Now, your closing costs are going to be a little bit less on $100,000. So let's say the closing costs are only $6,000 on that. So you ask for $106,000 purchase price with $6,000 credit, and now you have all your closing costs covered. 3.5% down is your down payment. $3,500 proration covers it, no money down. So I'm going to give you an example, about how it doesn't work out exactly right. So let's say you buy a $200,000 house and the taxes are only $5,000. That's better for you for your payment. Your payment's lower, but you're going to bring $2,000 to the closing table, because 3.5% down is $7,000. The tax proration's $5,000. So they give you $5,000. So it's going to cost you $2,000. We got the closing costs credited to you exactly right. So keep that in mind, that the tax proration will cover it'll offset your down payment, and that's how it always works out in Illinois. And please like this video and share this video, and go to GustanCho.com or call me at 630-915-7550. Thank you very much.